Welcome back to our podcast. Today we have an exciting lineup for you. We're diving into the impressive financial performance of Cisco and Firefly Aerospace, which have both shown remarkable resilience and growth in the market. We'll also unpack the ongoing government shutdown and its potential effects on economic data. To help us navigate these topics, we have our financial expert with us. How are you doing today?
I'm doing great, thanks. Excited to discuss these developments. There's a lot happening in the market right now, and it's fascinating to see how the landscape is shifting.
Absolutely. Let's kick things off with Cisco. The company recently reported earnings that exceeded expectations, and their stock has seen a significant surge as a result. What are the key takeaways from Cisco's earnings report?
Well, Cisco's latest earnings report was quite impressive. They posted a revenue of $15.2 billion, which was above Wall Street's expectations. One of the standout points was their growth in subscription-based services, which is a shift we've been seeing across many tech companies. This pivot towards recurring revenue models tends to stabilize income and can enhance long-term growth prospects.
Right? Subscription models are becoming increasingly popular as they provide more predictable revenue streams. Can you delve deeper into how this shift has impacted Cisco's overall business strategy?
Certainly, Cisco has been focusing on transforming itself from a hardware-centric company to one that offers more software and services. This transition has allowed them to tap into different revenue streams, including security and cloud services. In their latest report, they highlighted a 25% increase in software revenue, which is a testament to this strategy. Not only does this diversify their offerings, but it also aligns with current market trends, where businesses are looking for comprehensive, integrated solutions.
That's a smart move. With the increasing demand for cybersecurity and cloud infrastructure, it seems like Cisco is in a prime position to benefit. How do you think investors are reacting to this shift?
Investors are generally optimistic. The surge in stock price following the earnings report indicates strong confidence in Cisco's future. When a company demonstrates consistent growth in a key area like software, it typically attracts more institutional investment. Furthermore, their guidance for the upcoming quarter was also positive, which likely reassured investors about their growth trajectory.
Speaking of guidance, how important is that for investors when evaluating a company's future performance?
It's incredibly important. Guidance provides insight into management's expectations for the future and can heavily influence investor sentiment. If a company issues optimistic guidance, it often leads to increased buying interest, which can drive the stock price up. Conversely, if guidance is conservative or disappointing, it can lead to a sell-off. In Cisco's case, they projected a revenue increase for the next quarter, which is a strong signal to investors that they expect continued growth.
That makes sense. Now, shifting gears to Firefly Aerospace, they've been making headlines lately as well. Their performance in the market has been quite noteworthy. What's driving this momentum?
Firefly Aerospace is riding a wave of positive sentiment due to their recent successful test flights and contract wins. They're carving out a niche in the small satellite launch market, which is becoming increasingly competitive. Their Alpha rocket successfully completed its test flights, and they have secured contracts with NASA and other commercial clients, which bodes well for their future revenue streams.
That's exciting. The small satellite market is indeed booming. With more companies looking to launch satellites for various applications, Firefly seems to be well positioned. How do their capabilities compare to competitors in this space?
Firefly has positioned itself strategically by focusing on cost-effective solutions for small satellite launches. Their pricing model is aggressive, which is appealing to startups and smaller enterprises that may not have the budget for larger launch providers. They also emphasize reliability and speed in their launch services, which can make a significant difference for clients needing timely satellite deployments.
Reliability and cost-effectiveness are essential in this industry. It seems like Firefly is setting up a strong foundation for future growth. How are investors reacting to Firefly's recent achievements?
Investors are clearly excited. The stock has seen a notable uptick following their successful test flights and contract announcements. There's a lot of enthusiasm around space exploration and satellite technology, and Firefly's entry into the market has garnered attention. However, it's important to remember that while the potential is great, the aerospace sector can be volatile, and companies often face regulatory hurdles and funding challenges.
That's a great point. The aerospace industry can be unpredictable. With that in mind, how do you think the current government shutdown could impact companies like Firefly?
The government shutdown could have significant implications. In particular, companies that rely on government contracts for funding and support can face delays. Firefly, with contracts from NASA, may experience slowdowns in project approvals or funding disbursements. If the shutdown continues, it could hinder their operational momentum and affect investor confidence.
That's crucial to consider. The government plays a vital role in the aerospace industry, especially with funding and regulatory support. Speaking of the government shutdown, what are your thoughts on how it might affect economic data releases overall?
The shutdown can create a ripple effect across various sectors. Many critical economic data releases, such as employment figures, GDP growth, and trade balances, may be delayed or temporarily halted. This lack of data can lead to uncertainty in the markets, as investors rely on these indicators to gauge the health of the economy. If the shutdown persists, we might see increased volatility in the markets due to the uncertainty surrounding economic conditions.
That uncertainty can really shake investor sentiment. What specific economic indicators do you think will be most affected?
Key indicators like the monthly jobs report and consumer confidence index are particularly important. The jobs report gives insights into employment trends, which are crucial for understanding economic health. If this data is delayed, investors may struggle to assess the labor market's strength. Similarly, consumer confidence directly influences spending, and without timely updates, it can lead to misinformed investment decisions.
It sounds like the shutdown could create a perfect storm of uncertainty for investors. How do you think they should approach this situation?
Caution is key. Investors might want to adopt a more defensive strategy in the face of uncertainty. Diversifying their portfolios and focusing on companies with strong fundamentals, like those that are less dependent on government contracts, could be prudent. Additionally, keeping an eye on developments regarding the shutdown and any potential resolutions is essential. It's a waiting game at the moment.
That's solid advice. It's always wise to stay informed and adapt to changing circumstances. As we wrap up today's discussion, what do you think is the key takeaway for investors regarding Cisco, Firefly Aerospace, and the government shutdown?
The key takeaway is to stay informed and adaptable. Cisco's transformation into a software-centric company is a great lesson in the importance of evolving with the market. Firefly Aerospace's growth potential in the small satellite launch sector shows the opportunities available in emerging industries. However, the looming government shutdown reminds us of the external factors that can introduce risk and uncertainty. Investors should be vigilant and ready to adjust their strategies as new information comes to light.
Well said. Thank you for sharing your insights today. There's a lot to unpack in the current market landscape, and I'm sure our listeners will appreciate the depth of analysis you've provided.
Thank you for having me. It's always a pleasure to discuss these topics. I look forward to seeing how these developments unfold in the coming weeks.
And that wraps up today's episode. Thank you to our listeners for tuning in. Don't forget to subscribe to our podcast for more updates on the market and financial insights. Until next time.